Good evening, everyone. Welcome to Audit Committee. It's just before 7, so I'll kick off. I'll begin with apologies and substitutions. I've received one apology from our independent member, Alan Finch. Are there any other apologies? No? Okay, thank you. Are there any urgent matters? No, thank you. Are there any declarations of interest? None. Thank you. Are there any matters to be considered in private? No. Thank you. Minutes. Are the minutes agreed as a correct record of the meeting held on the 26th of September 2024? Agreed. Thank you. That brings us to item 6. I believe that's Bridget, who is online.
Okay, hello. This is the Treasury Management Update Report. There's nothing unusual that has happened in the last quarter. We have continued to manage risks. That lies at the heart of our investment philosophy. The main thing is to make sure we get whatever we invest back. Unless you've got any particular questions, there's nothing to report. One thing to highlight is that the return that we are getting will be coming down because base rates have gone down in November to 4.75. So we expect to see a reduction in the Treasury management income going forward. And but I don't think they'll be reducing the rates any further because they've basically announced that they expect the recent budget to be inflationary for the UK. So the MPC are going to be looking to stabilize interest rates for the foreseeable future. Unless you've got any particular questions, I don't think I've got anything to highlight in the report today.
Does the committee have any questions? No? Thank you, Bridget.
Thank you.
That brings us to item 7, which is Suresh and Rajesh.
Thank you, Chair. Good evening, everybody. Can I also introduce Katie O'Leary, who's the team leader on the audit. So we've got 2 papers for you this evening. One is on the main council audit for 23-24, which, if you recall from the September meeting, I explained that we would be issuing a disclaimed audit opinion on that, but I'll talk you through the key aspect of that. And then Rajesh and Katie will talk you through the pension fund 23-24 audit plan, which is planned to be a complete audit. So in terms of the council plan that's in your pack, as I mentioned, it will be a disclaimed audit opinion. So we've outlined in section 3 the kind of procedures that we as a firm have determined that we need to carry out in order to issue a disclaimed audit opinion. As you can see, that is fairly limited, which obviously reflects the fact that we're not giving assurance on the actual material accuracy of the accounts that you've prepared for 23-24. We are required under the requirements for disclaiming an audit opinion to still carry out the value for money work, and that will involve also following up the issues and recommendations that your predecessor auditors Deloitte have raised in the previous year. So we will be following those up as part of the 23-24 VFM work, and our plan would be to prepare our draft reporting to share with the Director of Finance in January, so we can then come back to this committee. I think in February you've got a meeting, haven't you, which will allow you to then publish the opinion in the accounts, but also the value for money reporting. The report also outlines our estimation of the fees associated with issuing a disclaimed opinion, as well as giving you an example of the actual audit opinion itself. I'm happy to stop there to take questions on that specific paper, and then we'll move on to the pension fund, if that's okay, Chair.
Yes, thank you. Does the committee have any questions? I have 2 questions from our independent member, which I'll ask. I'll just ask both of them together, if that's okay. So can the auditor give us an indication of their expectations in terms of delivering a value for money narrative on 23-24? And has the auditor had a chance to look at the Deloitte reports on 21-22 and 22-23? And does this change their view on the work required for 23-24? Thank you.
Thank you. So the value for money work, as I've explained, we will be carrying out the procedures that we need to do, which will include following up the recommendations made by Deloitte in the previous years, and we will be reporting our narrative in January as a draft and then a final to this committee in February. In terms of the reporting that Deloitte have got on the papers today, we had a quick chance to look at those. Under the requirements for a disclaimed audit opinion, we are not required to follow up any actual audit matters from prior years because we're not giving an opinion on your accounts. So we will look at what Deloitte reports in, and I think I've indicated to the finance function we're particularly interested in the internal control issues that have been reported because they obviously do impact on the value for money work as well. But we wouldn't be following up any specific audit issues from the accounts audits. Does that answer the question, Chair?
Yes, thank you.
But the council audit findings from the Deloitte report will be followed up and closed out as a part of management actions in any case.
Emily?
Yeah, we can probably pick that up as part of the Deloitte update. But yes, my expectation is absolutely that, yes.
Rajesh and Katie?
Sure. Thanks, Chair. Thanks, Suresh. As Suresh said that for the pension fund, we'll be doing the full audit for 23-24. And the scope of our audit is to perform the audit of the financial statement of the pension fund in accordance with the international standards on auditing and the applicable ethical and professional requirements. So in terms of our audit approach, we follow a risk-based audit approach, and the nature, timing, and extent of audit procedure are primarily driven by the different areas of the financial statements which we consider to be more susceptible to the risk of material misstatement. And a high-level audit approach is given on page 10 of our report. So in terms of audit approach, there are different steps. The first step is to understand the entity and its business and the environment in which it operates. And then we determine our audit plan, including the materiality and the significant components in case of a group audit scenario. And then we perform our risk assessment to identify the risk of material misstatement, including the significant risks. Based on those risks, then we plan and perform our audit procedures to respond to these risks. And towards the end, then we conclude our audit based on audit findings. In terms of audit timelines, agreed with the management, we'll be performing the planning and risk assessment work in November, December. So already started the planning for the pension fund. And the main field work is starting mid of this month. And the completion we plan in February 2025. We have identified two significant risks, which are mentioned on page 14 of our report. The first risk is the risk of management override of control, which is a default risk, and it's applicable to all the audit as per the auditing standards. And this risk is primarily based on the assumption that management is always in a unique position to perpetrate the fraud by overriding controls which are otherwise working effectively. So we address this risk through our audit procedures in different areas, especially the areas which involves management judgment and accounting estimates. And then we test few sample of journals which meets our risk criteria. And then we audit any significant transactions outside the normal course of business and the material adjustments which are posted in the accounts at the time during the preparation of the accounts. The next significant risk we have identified is the valuation of level 3 investments. The valuation of level 3 investments is generally a very complex topic because the price of those investments is not generally available through the security markets. So there's a judgment and professional judgments involved. And due to this, we consider this as a significant risk. And we plan to address this risk by a substantive audit procedures. Some of the procedures are like obtaining confirmations, direct confirmations from the fund managers, and obtain the control reports of the fund managers, ISA 3402 reports, which confirm that the assets are valued independently and they were subject to review in case of any exceptions. So that's all on the significant risk. Our fee and our independence confirmation are given on page 19 and 20 of our report. With this, I'll hand over to Katie. She will take you through the materiality levels.
Thanks, Rajesh. So on page 24 of our plan, we've included the details of our materiality. We expect to set the overall financial statement materiality at 1% of the pension fund net assets. This is the same benchmark used by Deloitte in previous years and equates to just over 16.5 million. We are setting the performance materiality at 50% of the financial statement materiality. So that's just over £8 million. In setting performance materiality, we've taken into consideration that this is a first year engagement and that the prior year audit opinion was a disclaimed opinion as a result of the backstop. The result is that that percentage applied is only 10% above our lowest threshold, but that means that in future years we have scope to increase it. We expect to set the trivial threshold at £500,000. So we will report any errors above that amount to you as the audit committee. In addition, we will also set a lower materiality for the fund account. We have set this at 10% of the contributions receivable, equating to around £6 million. So now we welcome any questions.
Does the committee have any questions? Councillor Martin.
Thank you. So I'm also on the pensions panel. So I was just wondering, we've just had the 3-year evaluation of the fund. So the work that you're doing, would that affect that, the current evaluation that we're working on as our base now? Or are we talking about doing things that are more, topical now?
Just clarify. Sorry, you talk about the triennial valuation. Yeah, that'll be. Is it the year ahead? So it's 25, 26. Yeah. It's always out of sync. So no. So these accounts don't reflect the triennial valuation that you've just had. This will be reflected of the last triennial valuation you had, which was 2022. Yeah, that's right. Yeah.
Any further questions? So can I ask the committee to note the report? Thank you. That brings us to item 8, which is the annual audit closing report. And I believe today we have Jonathan and Eleanor and Gina. Thank you. Yeah, if we could start with Emma, and then we'll hand over to Deloitte. Thank you.
Okay, so for item 8, we're asking the audit committee to consider Deloitte's report, those charged with governance, Appendix 3, and to approve the statement of accounts, including annual governance statement for 21-22 and 22-23 for the London Borough of Ealing and for the London Borough of Ealing Pension Fund, and authorise the signing by the chair of the audit committee. Can I also ask that we're approving the letter of representation, which is also found within the reports from Deloitte. It's worth noting, just before we move into the reports, that the drafts, the final statement of accounts that were circulated with the papers, there were a few minor changes to these accounts. They were only minor changes and there was no impact to any of the closing balances on either of those accounts. It was just minor changes within some of the wording and a couple of the tables. I'll hand over to Jonathan and Dina and Eleanor to update on the audit reports.
Great, thank you very much. Good evening, everybody. As Emma has said, we've got a number of reports in the pack, and some of them are quite long. I'll just summarise them briefly. I'll focus on the ones relating to the council's audits for the years 22 and 23, and then Dina will take you through the two reports that we have on the pension fund. And just to explain, so we've got one main report which covers the 22 audit and the 23 audit. And then we have something called an annual auditor's report, which essentially is just really a summary of the other report with some more detail about commentary on the authority's value for money arrangements. So I won't go into detail in the second of those two reports because it's largely just a repeat of the first report. Our first report is on page 477 of your pack. Just as a summary, and I'm sort of thinking in terms of what we presented last time in September, we've given background as to the backstop arrangements and implemented by the government, and Suresh has just summarised and given a reminder of that, so I won't go into that. The deadline for signing these accounts is the 13th of December. And as we've said before, if the audit is not complete at that point in time, we're required to issue what's called a disclaimer of opinion, which is what we expect to do for these 2 years for the council's accounts. In the report, we summarise again the scope of what we're required to do, which is a limited set of procedures in respect of these accounts. We set out our materiality, which was 24.5 million for 2022 and 26 million for 2023, and that's based on 2% of expenditure, which is consistent with what we've done in the past. We also set out the scope of our work with respect to value for money, and that through our work around value for money, we identified a significant weakness in the authority's arrangements in those 2 years, in 22 and 23, in respect of managing the council's risks, maintaining an adequate system of internal control, taking timely and effective corrective action, and complying with relevant laws and regulations, particularly in relation to fire safety and housing. We have made recommendations with respect to the implementation of remaining recommendations from internal and external reports, and monitoring of the effectiveness of changes to arrangements as a result of implementing the authority's action plans. Within the report, we also set out a number of other control recommendations for your attention, and also the unadjusted misstatements that we are aware of through the limited procedures that we've performed. However, I know we've not been able to complete an audit for those 2 years. As I said, there is a second report which is on page 523. I don't propose to go through that in detail. That report is referred to as draft, and that's because we sign that on the day of signing the accounts, and it becomes final on that day, but we don't expect it to change between now and Friday when we anticipate signing the accounts. When I anticipate signing the accounts, you'll sign them before that. So yes, so I think that's all I was going to cover on the first two reports. If I hand over to Dina to cover the two pension reports, and then if we take questions on all of them, would that be okay?
So first, I'll take you through the 22 report, and slightly different to the council one, we are issuing a full opinion on the 22 audit of the pension fund. We are disclaiming 23. So last time at the last council meeting in September, I took you in detail through this report. What I propose to do is just highlight the changes that have progressed since then. So in September, we noted that there were a number of items still outstanding, notably the IS 26 valuation. That has now come in, and we've checked that there is no additional items to note, except for two recommendations, findings highlighted further down the report. If we then look at, so Appendix 2. We have slightly changed some follow-up on the prior year control findings and control deficiencies. We've concluded on some of the work. Then we have raised some control findings and disclosure deficiencies in the current year, which we've noted in Appendix 3, and we have annotated. And I draw your attention to the second page of that, which with regards to the Goodwin ruling and the Virgin Media ruling, which are two new findings that came out of the IS 26 work that we did. That concludes the 22 report. If we then move on to the 23 audit report, as I said, we are issuing a disclaimer opinion on this audit, and page 3 takes you through the reasons why we are issuing a disclaimer opinion, and Jonathan has already alluded to that. If we, on page 5 to 7 of our report, we take you through what we have done, what procedures we have done, and our conclusions. So one of the first findings is we raised some findings in the 22 report, and we have found that those findings are still valid for the 23 audit. And then the appendices, we have noted some misstatements, notably in the fair value hierarchy, same as for the 22 audit. They have been corrected in the final set of financial statements, as have a number of inconsistencies and rounding differences. So they've all been adjusted. And then the subsequent appendices take you through the audit report wording and the representation letter.
Thank you. Do any of the Ealing officers have anything to add before we go to questions? Emily?
Thank you. I think probably important just for us to pick up, I think the point that the Audit Committee will need reassurance on is the point made in the report around the implementation of recommendations, and you will absolutely get no argument from me that we should be implementing recommendations that are raised by external and internal audit, and I suspect we've got some work to do. I think we've had a conversation with the auditors around the wording in the report, because I was sort of concerned that it suggested that that wasn't something that we thought was important, and it certainly is. I think I had a useful explanation from the auditors in that they're giving an opinion on the accounts in 21-22 and 22-23, and they have undertaken limited procedures as part of this to follow those up, because that's not the work. A full audit isn't required as part of the audit. What I would say, though, is they will be quite right that we haven't implemented them in the accounts that they've seen in 21-22 and 22-23, because there is, you will all know that we had a significant sort of delay in the audit opinion in 2021. So that audit reported was signed in April 24, with a lot of reporting admittedly before that in December 23. But by that time, both our 21-22 and our 22-23 accounts had already been drafted. So we absolutely, you can expect us to have included those in our 23-24 audit, which Mazars will clearly follow up on from the sounds of that. So I didn't want the audit committee to believe that we had those recommendations and we simply ignored them. That's not what we do. There is a timing issue, I mean, to be fair, there are still two that are in 2018-19 that they did report, which we cannot use that excuse for, both in relation to schools and review of capital, and we'll pick those up and report back to you. So I think what we need to do in order to give the audit committee the sort of proper assurance on that is take the full schedule. We've brought an update to the February committee, but we will bring another update because we've got a number of new members as well, and to give them reassurance for 23-24, because you'll be signing those off at the same time, that will say these are each of the recommendations, this is the status of that, and this is how we've treated them in the 23-24 financial statement. So having clarified with the auditors, I don't disagree with the words they've put in here. They've been really clear on the limited procedures and that it is in relation to the 2 years. But I think unless you'd had that conversation with them, you might not understand some of the sort of implications of this. So let us bring something back again to reassure you. We don't disagree with what Deloitte have said and the scope of the work that they've done. But I think there's more we can do to reassure you.
Thank you, Emily. Do the committee have any questions? Yes. Councillor Khan.
Good evening, everybody. I just need to understand this meeting is a transitional meeting where the new auditors are taking over. I find it very unreasonable when my new auditors have left. While I understand whatever is being discussed was very, very important for the new auditor to take it from. And I need to know the reason why they left. Yes, he is not the head of audit. Head of audit was Katie who left. You are the audit manager, but she was introduced as a head of the audit. What was the reason of coming for 3 of the auditors here and 2 left? Then we should leave as well. My point is, these the points what we are discussing here when they are just about to leave the audit. It was very important points what they are discussing to show you should take over and start it from. And you are skipping everything.
Sorry, Rajesh, can you use your mic, please? Thank you.
Sorry. Yeah, so I'm saying that as part of the audit committee papers, we got all the deliverables of Deloitte's, and we did have a discussion with management also briefly on that. So we are aware about the issues which are there, which we need to follow up as part of our audit procedures, especially the value for money, where the Deloitte has reported a significant weakness. So we are well aware about the issue. So rest assured that.
And we here at this point of time, the cost of work, that's the reason we discuss. And we need more bother.
So this is a statutory disclosure, and we will also be issuing a disclaimer opinion on 23-24 accounts. So and 24-25 onwards, we'll start rebuilding the assurance.
Don't understand the basis of disclaimer. The opening balances is not audited. And how will you start it from then?
Councillor Khan, if I could just come in, we, as Alan has asked, Mazars have acknowledged that you've read Deloitte's report and you've understood it, and that you'll be continuing the work from there. So I hope that does ease your concern somewhat, that they have read Deloitte's report and they'll be going from there, and they'll be rebuilding assurances.
Then I should not be asking questions.
Of course not, but they have read the report.
I need to understand why they left.
I think they've left because they've given their report, but I will let Rajesh answer your question.
I need to understand in the next meeting the reason why they left the meeting.
Noted. Okay, we'll get that answer for you. Thank you, Councillor Khan.
Thank you.
Emily?
if it just does provide any reassurance, as soon as the papers had come out, we did receive an email and communication from the partner in relation to those findings and asked to follow up some of those detailed issues that were in the Deloitte report, saying that they would need to cover those as part of that. I think as well, we all know, and I think the committee is sort of well aware of sort of my disappointment at the sort of national arrangements around disclaimers and not being able to have audit opinions. So you know, we understand that's a national issue, and as a result, the NAO and the trying to think who has issued sort of guidance to auditors on the disclaimer and how new auditors coming in relation to disclaimed opinions, what procedures and otherwise that they need to apply. So there's quite, unlike, I guess, the disclaimer in the private sector, that there is a sort of national response to this and a national audit guidance to what's expected of the incoming auditors going forward. So I know from our planning meetings with them, they are following that and will ensure sort of a proper handover and communications with the outgoing auditors to ensure that they have the necessary understanding taken up the new audit.
I'm just going to check that Councillor Kine is satisfied with that answer.
It is fine, but me being myself as auditor, I know this is not the right way.
Okay. We'll get an answer to your question for the next meeting. Thank you. Sandeep.
So I echo the sentiment of Councillor Khan. What should have happened is at the beginning of the meeting, perhaps it should have been noted that the partner would be leaving and it would have the impact on the meeting that Councillor Khan feels at this point in time. So I think going forward, we do need full presence of the external auditors on the committee, and there should be any special reasons as to why they should be excused from the meeting.
Thank you. Noted. Are there any further questions? Councillor Martin.
Yes, so obviously I'm relatively new to the committee, so all of this predates my involvement in the committee. So I'm just looking at what's happened in the past as described in your report, which is that obviously progress updates are given to the committee about the responses you're making to the audit. So I'm assuming that we're going to expect to see something like that in some detail, are we, at the next meeting? And just one other thing, because I know I was aware that we'd referred ourselves to the regulator on the housing issue, and obviously that's again, I presume, an area that since this we've made some, I'm not saying it's going to be perfect, but we've made some progress on. So just so I understand how to read this, really.
Emma?
So for the first point that you made, yes, so I reported, it was on the ISA 260 recommendations, the whole list of recommendations about management checks or anything going into those accounts. They were reported on in February 24 to Audit Committee, and we gave them a red, amber, green status, and actually at that point, I think, off the top of my head, it was approximately 72% were implemented already. So we've only got a small selection that I will update on, and then any further that have come from the recommendations. That report will be brought to the February committee again, so the next committee where we meet. Okay.
And Emily.
Thank you. So yes, and the external auditors will bring progress updates as well. Actually, I think we expect by January to be pretty far progressed as well. So you'll get sort of independent updates, and we'll provide responses to any issues which they might raise. As to the main point and the point of the value for money conclusion, specifically in relation to the housing, health and safety, yes, absolutely, we have made progress on that. It's quite right that in 21, 22 and 23 those matters remained outstanding, and therefore it's correct that they should still be a consideration in the value for money conclusion. We have made significant, or we had because we're another year on, we had made significant improvements during 23-24, and the 23-24 internal audit opinion was not limited. So the head of internal audit has also reviewed the progress that we've made in those recommendations. We are still sort of self-referred to the regulator. We haven't yet lifted that. We have had significant discussions with them, and they are satisfied that the issues that we reported to them are being resolved. The VFM report notes a recent communication in relation to Morton and Rufford. And so because we're still working through that, we felt we needed to have that issue closed before we asked the regulator to lift their notice on us. So yes, you can be reassured that we have made progress already, and part of that you've sort of got reassurance from, you weren't here so you wouldn't know, but Mike's AD of Audit's opinion for the 23-24 financial year, where those issues were initially raised by him and have been followed up during 23-24 to ensure that progress has been made.
Thank you, Emily. Are there any further questions? No. So I'll be happy to agree the recommendations. And do we agree to formally acknowledge the summary of recommendations in Appendix A on page 536? Yep, agreed. Thank you. I'm just going to take this opportunity to thank NICE, Bridget and Louisa and the extended finance teams for all their hard work. Thank you. Okay, that brings us on to item 9, accounting policies. Over to you, Emma.
Thank you, Chair. Okay, so I will take the report as read, and this is just to note the accounting policies for the determination of the Council's statement of accounts for 24-25, and note the implications of changing in accounting standards for future years. One of the key changes for 24-25 is the introduction of a new standard, which is IFRS 16. This is for leases. Effectively, operating leases will be treated in the same way as a finance lease, so brought onto the balance sheet. But we envisage immaterial impacts to our general fund or any of the revenue accounts for this. So I'll take the report as noted, and any questions I'll be happy to take.
Are there any questions? Thank you. Can I ask the committee to note the report? Thank you. Okay, item 10, which is the progress report on the work of internal audit and anti-fraud for Q2. I believe that's you, Mike.
Thank you, Chair. So this report is for noting. It sets out the performance of the internal audit team in delivery of the plan which we agreed with the committee back in February 2024, highlighting attention to the reports at paragraph 5, which are the low assurance reports. There were 2 nil assurance and 1 limited assurance opinions during the period, and details of those reports and implementation dates are set out for members to note. Paragraph 6 sets out our overall performance. We are slightly behind where we want to be for the period, which has basically been a result of, as members will recall, we were basically recruiting our own team, having had a contract to deliver for a significant period of time. We've now, I'm pleased to say, successfully recruited 4 out of the 5 posts, and we're cracking on with the delivery and hope to deliver the majority of the plan by the end of the year. As you'll see, a number of the projects have already started, with just a small number that we need to begin. Page 609 is the update on follow-ups. There are 10 high-risk recommendations outstanding. It was 11 in September. Two of the longer standing ones, I'm pleased to say, have dropped off, and there's 2 new ones which are actually very, very fresh, have popped up. The Let's Go South are ones you'll note, which is the report is also to come to you this period, so quite an ambitious turnaround time to address that. The majority of the recommendation has been addressed, but some minor points that need clarification at the monitoring board in January. So hopefully when we come back, those 2 will have dropped off. We continue to track, and SLT are very supportive of this. I report back to them regularly, and they're trying to ensure that their teams are progressing these. It's not always perfect. There's always going to be the odd one that's delayed, but I think we're in a better space now than we have been over the last few years, and things are we're definitely seeing progress on all of those recommendations. Final section is the fraud section. So it highlights some of the proactive work that we do to prevent and detect fraud, as well as the reactive cases where we refer to a case and investigate. I think the overall stats there are up against previous years. We've had overall notional actual savings of 335k for the year to date. I'll take any questions.
Thank you, Mike. Any questions from the committee? Sandy?
Mike, in terms of your coverage of your audit plan, are you tracking well against that? Because I know you sometimes, well, I think it's last year you had to give a limited assurance opinion, is that right? So do you think there'll be a more comfort as a result of greater coverage?
The level of coverage is the same. The limited assurance was so last year was a reasonable assurance opinion.
Right, sorry.
The prior years was basically as a result of the number of reports that received a lower level of assurance. So this year is fairly consistent number of audits. It's too early to predict where we're kind of headed on that. What I would say is in the finance arena, we've been fairly strong assurances, and a lot of the Q3 work is around those. So I think it'll be a much more balanced report when we come back to you. Hopefully in February, that's quite soon, and there'll be a bit more completion there, and we'll have a better idea of what the likely forecast is for outcomes.
In terms of the audit plan, you're tracking to plan, would you say, in terms of, or are you slightly behind?
So we're slightly behind because we went out to recruit and we didn't recruit quite as quickly as we wanted to, but now we've successfully recruited fairly. We've kind of allocated all the work. So if everything goes to the remaining, the end of year plan, sure. we should be able to achieve the plan. It'll be tight, but we've got most of the stuff kind of in place and dates agreed with management. So it's really just a case of motoring through. So we're fairly confident we can deliver the bulk or if not all the plan.
Is there a plan B just in case in terms of getting more resource in to support it to complete the plan? So should you get to that point?
So so part of the issue. So we set out to recruit during the year, and then we did our first tranche, and weren't successful at recruiting everybody we wanted to. At that point, we knew we needed to move some. So PwC was our strategic partner in the previous year, so we allocated them, and we'd agreed to allocate them some of the plan. So we've given them some of the. So we've now allocated them that, knowing that we were still recruiting. So that's been our kind of backup plan. So some of that is already in place, and some of it is now. We have deputy head started in June. We had one start in August. We had another senior auditor start on the 18th of November. We've got another one start in January. So we're kind of allocated it all out. So as long as they all start when they said they were going to, sure. and are able to deliver the plans and the time frame, we're fairly confident. And plan B would be to look to PwC as our partner to deliver some of that work. But it will be a decision as to whether we've got sufficient or whether we need to do additional. But I'm fairly comfortable with there or thereabouts, and we'll be able to give an opinion.
Thank you.
Are there any further questions? Councillor Martin.
Because I don't understand how these things work, but those 3 areas that you've identified as with serious weaknesses, I suppose. How do you get to nil? I mean, what sort of threshold of failure, if you like, is there? And with particularly that, I think the housing one, because it's about health and safety, the fact that it's March 2025 has been given as the deadline. Is that for all of those? Because some of them, that, for example, the health and safety checklist before leasing property, we could hopefully implement that now for anything new, for example. So I just wanted to get a better understanding of that.
So there are 4 levels of assurance. There is substantial, which is as good as it gets. Reasonable, which is such a horrible term, isn't it? But it's kind of, you've got, and this is about what's the likelihood of you achieving your kind of objectives. So reasonable is most of your controls are in place. There's a few improvements. Limited is there are a number of high-level weaknesses which might impact on the achievement of your objective. And then nil is there's quite significant weaknesses which are likely to impact on the achievement of your objective. So that's kind of framing it. I mean, there is sitting behind that science and numbers, but sometimes you actually have to go, actually these 2 high opinions give a bigger weakness than 4 high opinions. So it's not an exact science. In terms of the implementation dates, what we give you is the final date for all of the actions. So there may be actions that are implementable earlier than that. And yeah, certainly we would hope that sometimes it's like if it's a case of putting a checklist in, they crack on and get the checklist in. But we would also look to see that actually not just there is a checklist, but actually that it's actioned and using. So we'd kind of wait a little bit for an assurance on that. And then we come in and we look at all of those actions and we report back to you on any high recommendations that haven't been implemented by the date, which is the table later on. So you get an update on any of those which haven't been actioned on time, as well as if it's in progress or they've just ignored us, which is rarely the case, thankfully. So we continue reporting those until they're done, whether it takes 2 weeks or 2 years or longer. Not many do, fortunately. So we do try and make sure committee are aware of where those actions are outstanding and where they're at now. Emily,
did you want to come in?
Thank you, Chair. Yes, I'm just coming back on the specifics of the health and safety, it's in relation to homelessness properties where we place them. So we took that, SLT took that report as soon as it was finalised, because clearly this is something that we need to sort of prioritise and be on top of, and took the action plan and have been tracking the actions in relation to this. So just to reassure you, the other thing we do is track implementation of internal audit recommendations, and we know we've got 3 coming up on that specific audit by the end of this month. So we expect responses by the end of this month to implement those recommendations. Mike's team then independently follow up and review the evidence to check that we have implemented them. And as Mike said, we'll report back to you if we haven't by the deadline. But in answer to your sort of question of the 2025, yes, we've got 3 high priority recommendations that are due for the end of December, and I know work is underway to ensure we address them.
Thank you, Emily. Any further questions? I have 3 questions from Alan, which I'll read out all together if that's okay, Mike. How are dates for implementation of recommendations agreed with management, and specifically, why is it going to take until June to implement findings on secondments and pay variations, which would seem to need immediate action? In relation to temporary accommodation, will all contracts be in place by the end of March? Referring to the table at paragraph 10 of overdue recommendations, one of which has been outstanding for 2 years, what actions are officers proposing to get this list down to less than a handful? Thank you.
Thank you. So in terms of the dates for implementation, we asked management to give us an indication of when they think they can realistically achieve the implementation. If it's too long, we will challenge that. If it's too short, we might challenge it too, because you need to make sure that it's realistic. And an actual example of that was the secondments. Although we could quite quickly implement certain actions, to do it holistically and properly, it was suggested that it's pulled together as a plan to allow management time to adapt and to respond, etc., etc. So an initial date was suggested of March. And I said, are you sure that's actually realistic? It's better to overachieve than underachieve and fail. So we kind of push back on those to try and make sure they're as realistic as possible. Equally, if it's a risk that absolutely needs to have been addressed by yesterday, we would flag that it needs implementation. We wouldn't even wait for the audit report, and we would flag to management that it needs to be done. In terms of TA and all the contracts, so there are two parties involved. There is the council and the individuals who need to sign those contracts. So there is the council is endeavouring to do everything it possibly can in order to get people to sign up to those contracts. Whether they'll get all of those is to be seen, but the endeavours are there, and they will also have the conversation about whether they can continue business with them if the work isn't if the contract isn't signed. So they'll be pulling all the possible levers to try and ensure that those contracts are in place. And I think there is an element of the substantial risk is done. So if 95% of them are done, we've mitigated the majority of the risk, and getting through that smaller number should be a little bit easier and things to focus on. So the aim is all of the contracts by the end of March. In terms of the final thing around the overdue by 2 years, so this list is also tracked and reported to SLT, and SLT do chase up. The specific one around temporary staff, that probably is the 2-year one, I think, from memory looking at it. So there has been an incredible amount of work around temporary staff. We've refreshed all of the tenures, and it's seen significant steps in the council to do it. The number of temporary staff employed has reduced significantly. We're not so the risk has been done, but there is a need just to make sure that the managers are doing the recruitment checks that they should do, and that we've just not got that over the line. I speak regularly to the managers who's doing it. It is very, very close to starting now. It's the smallest thing she needs to do, to be quite honest, to get it over the line, but I'm not letting her away with it. So we do regularly speak to them. I think, as we kind of said last time, if you've got concerns where actions aren't going, then there is also the opportunity for you to speak to managers to understand why actions haven't been taken. So if you wanted to invite them to a future meeting, if it's not been fully implemented, we'd be happy to discuss that.
Great, thank you. I have one question. So the items that we do have a final report on, those items have either a nil or a limited assurance, and they're the only ones that we have a final report on. So is that of concern?
It's not the best news, but it's early stages. The whole, we've got a number of reports, and when I come to write my annual opinion, it's based upon all of the work completed during the year. As I mentioned earlier, there are a number of key financial systems. In the past, they've generally had a reasonable level of assurance, so that will start to put the balance back into a better place, I suspect. So too early to be bad news, but it's not a great start.
Great, thank you. Can I ask the committee to note the report? Thank you. Okay, that brings us on to item 11, risk management, which is Mike again.
Thank you, Chair. So this is the strategic risk register, an update for Q2. There are no new risks or changes to risk scores since Q1. There was a few updates underscored around temporary accommodation being added, which kind of reflects the internal audit report. Something's working there somewhere. In terms of the mitigations, there are some where the dates have passed. I don't think it's necessarily that they haven't taken the actions. It's just trying to get people to update the risk register. I discussed this with SLT and subsequently with Emily, and we're refining the process to try and make sure that people are contacted earlier to try and get those updates. It's not a perfect world, I know. I'd love them all to just get up and do their updates straight away, but I think we just need to ensure people are reminded at an earlier point. We've implemented a new process to try and ensure those updates are captured earlier, and so we can chase people where things aren't, and hopefully we can at least get the mitigations in the right place so we know if they've been done or whether the date needs to be revised. But it's not an apathy or lack of concern. It's just doing the admin to support it, and we just need to make sure that we capture that fully so we can report it back to yourself.
Thanks, Mike. Any questions? Sandeep.
I note some closure dates for the 31st of the 12th. Are they realistic closure dates? Because it's Christmas period. Is that?
I'm holding them to it. With the benefit of hindsight, you'd never set one for 31st of the 12th, would you? But then we've got a number of audit recommendations due then as well. So yeah, I'm coming in with a mince pies to make sure they're done. But I think realistically, we'd let them have the holiday season and then just ask them for an update on the Monday when they're back.
Thank you. Any further questions? Thank you. Can I ask the committee to note the report? Thank you. And I believe we are done. The date of the next meeting is Tuesday, the 25th of February. And that brings us to the end of the meeting. Thank you, everyone, for attending.